Hi, today is November the 8th, and this is the SPX outlook for the coming week. Last week was a little crazy, probably the earnings tailing off on a very strong note, very bullish, and also dovish Fed. The market passed the 46.85, 46.90 resistance. It hit 47.20 or so. And this morning, when the market reopened, or last night, it tested 46.85.90 for support. And of course, it could be another bull run. At the same time, it looks like it may be running out of steam. It would be too early to rejoice for those who are market neutral or bearish. It's still quite important to go with the flow in this very crazy, incredible bull run. I think from early October lows, SPX was at 42.80 at one point, and 47.20. It's basically 10% rise in a matter of 5 weeks. Let's say that it's not really easy for market neutral traders. Now, going with the flow, we have to be increasingly cautious that the market can reverse, even if it's only a technical profit taking, a retracement. Every day I send you updates on where the market should be going. So if you're not on the Rhinos and Flies Slack, drop a message below and I will send you an invite. So on this one, generally I start with the 4-hour chart, so let's move on to the 4-hour chart. On this one, it looks like this rise is not really sustainable, but it's still okay. It's not out of this world. When it rises so sharply, it calls for some reaction. That said, of course, massive liquidity injections. This market is not normal. Okay, I would say that the market should at least pause, and maybe we've got PPI tomorrow, CPI the day after, with jobless claims actually. So when I see on the Econo Day that the consensus on PPI tomorrow is around 8.3, 8.4, I find it hard to believe that it is priced in. I think even if it reaches consensus, it is a very high figure. So the market should be concerned. And the market is concerned because this is SPX, but if we look at VIX, we've got a market up, VIX up, so there's concern, and we are very familiar with that for the whole of 2021. This is a retail-driven market, and the institutions are not selling, it's just putting on hedges, buying puts, and the VIX is artificially high in this bullish Goldilocks type of market. Okay, so now we are on the 4-hour chart. The resistance here is quite high. As you can see, the market could even reach 5,000 if we believe this. But at this point, this 46.90, still the pivot, may have been penetrated, and it is a key level because if this support confirmation holds, if 46.90 holds, yes, the market will keep grinding up. The market generally chooses which side of the pivot it's more comfortable with. So I would have thought that 46.90 would have held. Well, this line has not moved up, so that's some solace, if you will. But the market still has to decide whether they want to go further up or go back below to this range, below 46.90. I've plotted here the volume profile to see where the transactions took place, and we see that most transactions actually took place still in this lower part. So this means that this grinding up is actually with fairly low volumes. Anyway, so on this one, I would say go with the flow. Of course, we've got key levels to monitor, but we have to go with the flow. I doubt the market will retrace sharply unless there's a shocking news coming from PPI, CPI, but really earnings are behind us now, and I don't see what could really spook the market. So the chances of the market staying pretty high are definitely substantial. Now, if we look at the daily chart is even more insane. This is where I mentioned earlier that market went up by 10% almost without looking back. I mean, you see this sequence of green candles. Okay, they're Eikanishi, they're not exactly regular candles, but this is absolutely crazy. We could plot a fib from here, but it doesn't really matter. Everybody can do that and to check where the support levels would be, and I would assume that even if the market retraces all the way from current highs, this 45.60, the previous highs from September, would be a good support. Anyway, let's go back to the 1-hour chart for the next day or two. Here we see that the 4690 pivot on the higher time frame here is a resistance tested for support, but it could still be, I couldn't say broken, but it could still go south from there, because this resistance has technically not been broken yet. So this is a key level to watch, and of course the fibs below. I would say, since we have the strongest fib on the pivot for this time frame, without looking back since early October, I would say that a drop of even 1-2% to reach this level would be next to nothing. So the real key level for a potential reversal at some point would be around this area, 4610, 4620. So that's it for now. Join the Rhinos and Fly Slack group if you're not there already, and see you there for more regular updates. Thank you for watching, and bye for now.